back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Andy Swan. He's a co-founder at Likefolio. Welcome back to the show, Andy.
Happy Monday.
Happy Monday to you. Cava, Alex Coffey was just on the show. He said he just had it. He said he was kind of underwhelmed. I have not yet had it, but the stock up over 100% so far this year. Got downgraded today out of JP Morgan, but this has been a runner. Is this? Do you have the data that kind of supports the strength that we've seen in the stock?
Yeah, we do. I think Alex might have went to the first Cava restaurant in Chicago.
Yeah.
Which honestly I think encapsulates the opportunity here because this is a restaurant that serves bowls much like Chipotle. It's the Mediterranean kind of Chipotle. They've got 323 restaurants, whereas Chipotle has 3,381. So 1/10 the store footprint of Chipotle, and an appetite and an attitude for growth that we really like. And we're starting to see the results of that. If you look at, the search mentions of Cava bowls, it is definitely up and to the right, which tells us that the consumer's looking more and more for how they can get this product, what's in it, all of those indications that they're becoming more consistent buyers with word of mouth spreading. And we also see it in the digital traffic, up 62% year over year on the digital side, which tells us more and more people are researching how to get these bowls, how to find these restaurants, and what they're going to order. And so when we put all that together, we see massive tailwinds. There's a healthy eating movement that's going on. There's people love this company's customer service. They love the quality. They love the overall experience, which we think is very important. But most importantly is the fact, like I said at the beginning of this is a company with 1/10 the number of stores of Chipotle. So the upside for growth, the ceiling is extraordinarily high. They're pleasing their customers. Alex so far not included, but overall it looks like they're doing a very good job and have a lot of runway for growth. Now, whether or not the stock is overvalued, undervalued, it's really difficult, as you guys know, to put a valuation on companies that are growing so consistently and so quickly. So I'll leave that up to the individual investor. But what we can say at Likefolio is Cava is absolutely taking off from a consumer interest perspective and has a long runway ahead of it.
Andy, this company, when you read about it, it feels like a food company that Elon Musk would start, because that's how it's run and managed. They do it's a fast casual food chain, but they sell their dips and their sauces in grocery stores too. So they're covering that. They have a couple things. They do labor test deployments where they're constantly testing where to put the most efficient use of employees to keep costs down. They've got a thing called the Connected Kitchen, where they use AI initiatives and generative AI to improve the overall service of the kitchen. If they do all this and they get the food close to good, there's no way this company can fail.
Yeah, I really agree. I think that it's a Chipotle that has the advantage of seeing what Chipotle's mistakes were during its growth curve, and using technology, like you talked about, whether it's AI, machine learning, a multitude of different technologies and digital initiatives to reduce expenses and maximize revenues all along the way. So at 323 restaurants, we're 1/10 of the way to Chipotle's footprint, and with the potential to have significantly better margins all along the way through this use of innovative technologies. And so it's kind of the best of both worlds, I think. I think it's the future of restauranteering, and that is figure it out really, really well at a small scale. And then you've got extreme growth in terms of footprint to go from there. So, we like what we're seeing from this company pretty much every step of the way.
Andy, they want to have 1,000 stores by 2032. That's up from, as you mentioned, the 323. But if you look at some of that data, is this all about scale for Cava at this point, where if they can open the stores that they want to open, I think they're going to open like 55 so far this year. But is this about scale? Because when you look at the digital traffic, that continues to move higher. And like you said, I mean, Chicago, big city, we've got one. That's it so far.
Yeah, I think it is a scale play. I also think it's an efficiency play. Like Kevin was talking about, this is a company that seems to be laser focused on making the most out of every employee, every square inch of store space, and every ingredient they're putting into their food. And I think that in an inflationary environment is extremely critical. I think they'll be able to pass on some savings to consumers and still maintain margins. So we're very excited about Cava. I think that it's possible that their 2032 goal of 1,000 stores may be even undershooting a little bit, especially if we can get any relief in interest rates. I think, it's expensive to borrow money to open those stores right now. And as that cost comes down, I think they could potentially accelerate their plan.
All right, great stuff. Great data as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at Likefolio, breaking down Cava's data. Now, as I mentioned, Kevin, JP